All right, thank you so much for staying with us. Crude oil prices rose more than $1 a barrel. That was Friday's figures. And oil prices were on track for their first weekly gain in 3 weeks. That's after favorable United States job reports and resumed trade talks between United States President Donald Trump. Chinese leader Xi Jinping raised hopes for growth in the world's two largest economies. Brent crude futures gained $1.28, about 1.96%. to $66.62 a barrel, and that's about 16:49 GMT. U.S. West Texas Intermediate crude climbed $1.34 or 2.11% to $64.71 on a weekly basis. Both benchmarks were on track to settle higher after declining for 2 straight weeks. Brent has advanced 2.75% this week. WTI is trading 4.9% higher. The U.S. Labor Department monthly employment report showed that employment rate has held steady at 4.2% last month. Employers added 139,000 jobs, which combined with downwards revisions to prior months' estimates, showed a cooling in labor demand, but noting abrupt by comparison, job gains averaged 160,000 last year. Now, a rate cut by the U.S. Central Bank, much desired by the Trump administration, is seen as a way to increase spending, raising demand for petroleum products. Now let's talk to Dr. Chinan Dikwal. He is the Vice Chair, African Energy Council. He joins me today, not from Qatar, but he's in Vietnam. Thank you so much. It's good to see you.
Hey, Tolu, it's a great pleasure. It's about 8:35 here in Vietnam, so yeah, it's a pleasure to join you.
Wow, thank you so much. Yeah, I don't know how first you react to this talks between United States and China and the entire impact of all of this on the global oil market.
It's a very, very interesting one, and the reason for that is in the oil and gas market, we have been struggling with a lot of very difficult news, lots of bad news over the last couple of months. This is very welcome and very positive that the US in direct discussions and negotiations. In fact, put it this way, President Donald Trump picked up the phone last Thursday and spoke to President Xi, to the Chinese leader, Xi Jinping, for the first time ever since this trade war started. So that is signaling quite a big shift and optimism in the sort of oil markets, which I think is very exciting. But bear in mind, which is quite interesting as well, OPEC have just resolved 2 Saturdays ago, to increase oil production by 411,000 barrels per day for the month of July. So even though that increase in supply, which has a negative impact on price, should weigh prices down, lots of analysts are pricing up, the discussion between President Xi and Donald Trump as very positive, and you can see the impact of that in the oil price. So the price of crude oil has gone up significantly. Brent is about 66.5, I think, dollars per barrel today. WTI, like you said, $44 per barrel. So overall, on the balance of things, it's very exciting, Tolu. But just to put this out as well, I'll be quite frank, over the last week, we have seen a lot of volatility. You remember 5 days ago, the fires around Alberta in Canada. So I think a huge swath of the oil fields in Canada had to be shot. Approximately 350,000 barrels of crude oil was impacted. So that, lots of that was impacted. So that means demand came down. We saw there that, it had a bit of impact on the price of crude and a variety of factors. You mentioned the job report as well. Unemployment down at about 4.2%. So there have been a cocktail of issues in the last couple of months, but I think without a doubt, this is super exciting. The prospect of talks, ultimately loosening of this trade glut, ultimately the economy is starting to grow, and when it starts to grow, ultimately there'll be an impact on the oil price. That is what we're seeing in terms of how analysts are looking at this.
When 60-something dollars per barrel is still not up to our projection or our assumptions for our budget. So if there's increased production, what does that really impact us? Some country like Nigeria, we are yet to even meet our quota at the moment. So if there is increased production, what does it mean for a country like Nigeria?
So I'll answer that question, but I'll just say this. I'll answer that question, actually, but let me just say, you see, what to bear in mind is everybody has to understand the oil market is a super complex and dynamic market. When I say that, what I'm trying to say is There are several forces that are trying to pull the price of crude oil down for a variety of reasons.
Mm.
There are a few forces that are trying to pull it up for a variety of reasons. And I would say this, bear in mind, don't forget, if we go back about 2 years ago, OPEC Plus took off the market about 2.2 million barrels of crude oil, 2.2 million barrels. Why did they take it off? Because at the time, there was global pressure globally, and they thought a way for them to boost the oil price was to remove demand, remove supply, so taper back in supply to allow demand and supply to come together. So price went up. So price went up quite significantly, $75 per barrel. They did that in 2022. They are now starting to wind back those cuts. When I say wind back those cuts, those barrels they took off the market, they're trying to put them back on the market. It started in April. In April, they put 137,000 barrels per day. In May, they put 411. In June this month, they're going to put 411,000 barrels per day. And in July, they've just agreed to put 411 again. Now, what I'm trying to say there is a sense in the madness. Why so? Because OPEC Plus are now playing not just a price game like they were before. Right now, it's a game of market share. They were trying to play around with the price before, but a few OPEC members abused their role. And I'll be very clear. Iraq has overproduced above their quota. Kazakhstan has overproduced above their quota. So that means they've taken up a lot more market share. That's number one. OPEC Plus now are coming. They're putting additional barrels on the market so they can squeeze those guys out. But beyond that, there's also the thinking, Tolu. President Donald Trump ran on a mandate of drill, baby, drill. He wants the oil price to be low so that interest rates can come down, like you were saying there, so we can get a rate cut and to put money back in the pockets of Americans. To do that, he needs a lower oil price scenario. Now, if that's to happen, you have to understand there are oil producers in the US as well. The lower 48, they're called, the Permian Basin, the shale producers. What OPEC is trying to do is trying to balance the game in such a way that it has enough leeway in terms of revenue, but not too high to allow the shale producers to come back into the market. The US shale producers have the highest cost of production. Their cost of production is one of the highest in the world. So if the oil price goes really high, they would come back into the market. They will oversupply again. So it's a game of trying to make sure they're squeezed out and kept out, but also punishing people who have oversupplied the market. And that's why you can see the price of oil at $66 per barrel. But I would say this, if you look at Goldman Sachs are forecasting that will close this year about $58 per barrel. About the same with JP Morgan. Most of the analysts do not see the price of 66 as sustainable in the long term. They see the price coming down. But to your point around Nigeria, $66 per barrel is great. Certainly better than what we had last month. We were around $60, for Brent, $61 for Brent, 62. But the reality of it is, if you look at where we are, our budget, so I'm talking about Minister Wale Edun, our budget is based on a $75 per barrel oil price. We're nowhere close to $75 per barrel. So we have a deficit. If oil is 66 today, we have a $9 per barrel deficit that we have to fill. So there's a big question there on Minister Wale Edun. There's a big question there on government. How do you finance that deficit? And that's something I think that is very poignant and quite important. And you can see the reaction of that by President Bola Ahmed Tinubu. He's now asking oil producers to look at cost efficiency. And I'm sure we'll talk about that perhaps around the new executive order that President Bola Ahmed Tinubu signed, asking for costs to be dropped very significantly.
Exactly. I was going to ask you that. I actually put that down, that Nigeria is trying to strengthen competitiveness in its oil and gas industry by the president saying we need to reduce cost and all of that. Well, we've been talking about this for some time. How really do we get this right and, start to cut cost and, be at par with international players in the industry?
Absolutely. So and I'll comment on that again, but it's really exciting for several reasons. One is, and I know I've listened to a lot of the programs over the last few weeks, especially around the 2-year mark. The reality of it is we in the oil and gas sector are seeing a huge amount of movement. Movement that we haven't seen, I think, in the last couple of years. That's just the reality of it. The Nigerian oil production has gone up 30%. In the last 2 years. That's undeniable. We're seeing several small independents who are completely winning in ways that we haven't seen before. We've just put a new crude oil blend onto the market, the Obodo blend, corn oil. We have just commissioned the first export facility There's Indigenous by an Indigenous player, Green Energy Limited, or it just commissioned the Otactical export facility, $400 million. And all of that came off their balance sheet. So not even with sovereign guarantees. So we're seeing a lot of movement within the oil and gas sector in a way that we haven't seen before.
Hey, China
And
is
to,
on.
to
Can you
and to your
imagine?
point there, and to your point there, just to make it
Please, I beg your pardon, please. All right, you can go on, please.
Yeah, thank you. And just to make it super clear as well, when you look at the executive order that's been signed by the president, when you look at the, sorry, can you hear me?
Hear you, please.
Yeah. Oh yeah, thank you. So when you look at the cost efficiency order that the president has signed, it's a super attractive one. Why? Nigeria is one of the highest cost producers of crude oil in the world. So if you go deep water Nigeria for the sake of argument, you're probably talking production costs around $50 per barrel, $55 per barrel. So let's do the math. If the cost of production is $55 per barrel,
Okay.
and the cost of oil today is $64 per barrel, then you can see the margin is a very small margin that we have there for profitability. And this is just simple math, right? Of course, a lot more complex than that, but just in a very simple way. Now, compare that to Saudi Arabia. For Saudi Arabia, some of their fields is $5 per barrel. $5 per barrel. So $5 of cost. If oil is 64 or 66, you can do the math. $61 in profit. Very high level. Of course, much more complex than that. Okay, but this is the point I make. The president has seen a structural problem in terms of Nigeria's crude oil stack cost. Okay, and he's come up with an executive order, and that executive order is based on tax breaks and tax incentives that are meant to encourage IOCs, NOCs, independent, for them to undertake their development in a very cost efficient way so they can drop the cost per barrel of production. And if you're able to demonstrate a cost per barrel in production, a
Okay.
drop in there, you get a tax break within your royalty, in terms of royalty that you pay to government and several things. So I think it's really exciting, without a doubt.
Well, let me take you back. I'm bringing you back home again, still staying with Nigeria right now. We've seen also in recent times the flip-flop regards to pricing. I think when we spoke offline, I was trying to bring that up, that the issue of pricing, and that has started since we deregulated this market. Now, are we going to continue to see this, back and forth? But Nigerians are more interested in seeing a decline in price. That's on one side. Mr. Dangote also said himself that Nigeria is almost paying the cheapest price for fuel. That's looking at West African countries, meaning we are still doing pretty well despite subsidy removal.
He's 100% right, without a doubt. If you look at our per liter, I think per liter, we are probably about 860, give or take, around Lagos, 860 naira per liter, give or take. Compare that to some of the West African countries, even things like Guinea, you go to Niger, you go to, Ghana, just around the corner. Some of them are paying as high as 3,600 naira per liter. Now, if you wrap your head around that's a big thing. It's a big disparity, without a doubt. And when you think about it, so if I just take us back, when we had subsidy, would import crude, the Nigerian government would subsidize that crude, would sell at a particular price, and the general population were happy. Even if the price of oil was going up or down, nobody knew that because there was a subsidy that cushioned the effect. In today's world, because the market is fully deregulated, okay, what's happening here? The fact disrupted this existing order of importing crude oil, and many of us in Nigeria are feeling the benefits of that. 860 naira per liter compared to other countries around the world is a pure play benefit of the fact that we have the refinery right there in Lekki. We produce it right there. There's no foreign exchange. Okay, there's no FX cost from importing that could affect the band of crude that we take, transportation costs or logistic costs. If you can imagine, just for the sake of argument, let's assume we're importing this crude from Brazil. You're probably talking around 6,000 kilometers away. So you have all the freight costs, you have demurrage costs, just in case the vessel has been delayed there, you pay demurrage costs, you have freight costs that comes in. All of those costs are rolled up and they would have to pay for them in the pump. All those costs have been removed today. We produce it in Lekki. Whether you're in Sokoto, you get it all the way because it gets trucked to you right there. Costs are much lower. Efficiency of production has increased and all of that. So, and of course, there's huge competition. You have Dangote, you have NNPC, all of those together. The competition between the two is also meaning that price can come down. So, over and above, this is a very exciting development for the Nigerian state. I think the big risk for me, if you ask me, the big risk, Tolu, is the fact that the price differential is high. 860 naira per liter, 3,600 naira per liter across the board. So if we're not careful and our borders are very porous, then you'd find that exactly what we were suffering in the past could happen, where people start to smuggle, they buy here and then take it across, and then you start to have scarcity within Nigeria. So I think that risk is still there, and we have to look at that very intimately. But without a doubt, this is really exciting. I think Nigerians should be very proud and happy of the development.
Dr. Chinandikwa, there's never enough time to address all the issues we always plan for, but I must thank you. It's always an interesting time with you speaking around the oil and gas industry. Vice Chair, African Energy Council. Thanks for your time.
Thank you. Pleasure. Thank you.